Hello guys, good afternoon. Welcome to Gadget Tuition Center. I hope everyone watched the last video class. Uh, if you like the video, please like and share the video. If there are any comments or feedback, please leave it as our feedback in the comment section. I'll try to make it improve in the next video. Okay. Last class we saw about basics of company accounts. So we'll move forward. Today we'll see about the oversubscription and then forfeiture of shares and reissue of shares. Okay. So first, let us move with oversubscription. Okay. See, last class we saw about under subscription and the basic things. So oversubscription, I told you that I will teach it in a separate class because there are different alternatives in oversubscription. So in oversubscription, there are three alternatives. Basically, oversubscription means the number of shares applied is more than the share issued for subscription. Okay, but the under subscription is reverse of it. So the oversubscription is applied is more than the issued. Okay, this is called oversubscription. In oversubscription, for under subscription, there is no problem. We will generally whatever we are doing, say we will do the. But in oversubscription, there are three alternatives. So the first alternative is rejection of excess application. I think this first alternative we saw in the last class itself in one sum. Okay, rejection of excess application, and the second one is partial or plural allotment, and the third one is combination of the two alternatives. Yeah, first alternative and the second alternative is the combination of that. Okay, uh, let's move on with the first alternative. For example, first alternative is rejection of excess application. So whatever the application is excess, for example, applied is for example, 5 lakh shares is issue of shares, and the application we received is for 7 lakh shares. So okay, we are issuing 5 lakh, but we received for 7 lakh. It's a oversubscription. Okay, from the applicants. So the excess is 2 lakh shares. This 2 lakh shares is rejected and it will be refunded to the applicants. Okay, so it will be refunded means the entry will be reversed, and when we receive the applications, the bank account will be debited. But when we reject and refund, the bank account will be credited because it's refunding. We are refunding the amount. Okay, when we receive the amount, it will be debited. When we refund the amount, will be credited. So the entry will be bank account will be credited. So that is the first alternative. First, I will explain the three alternatives and then we'll move on to the sums based on the three alternatives. Okay, I have one sum includes three alternative. Okay. Next, second alternative is partial or pro-rata allotment. Partial or pro-rata allotment means we'll adjust the excess applications according to the allotment amount. For example, allotment amount is 2 lakh. We'll adjust the amount until 2 lakhs in allotment amount. Okay. After that allotment amount when we receive, we will minus the amount adjusted in the application amount and the balance will be received through allotment account. Okay, that's the second alternative. That is called partial or pro rata allotment. Pro rata allotment means based on the, for example, 2 is to 3, 4 is to 4, like that, 2 by 3, 4 by 3. So pro rata allotment is proportion of shares. It's allotment in proportion. That's called pro rata allotment. Okay. And the third alternative is combination of both. Combination of both means, for example, some shares will be allotted in pro rata basis and the excess application shares will be rejected. So that is the combination of both the shares. First alternative is rejection shares. Second is pro rata allotment. And the third one is it will be inclusive of both. There will be a rejection of shares and there will be the shares in pro rata allotment and the balance will be rejected and it will be refunded. So first we will be allocating the amount in the pro rata basis on the allotment amount and the application amount, and the balance excess amount will be refunded and will be rejected. So bank account will be credited. Okay, that's the third alternative. For example, application for 2 lakh shares are accepted in full. Okay, and the application for 1 lakh shares are rejected. So they are given that 1 lakh shares are rejected, and the balance application are allotted on pro rata basis. That is the ratio of 3 shares for every 4 shares applied. So this is the concept. 2 lakh shares are accepted, and in that 1 lakh shares are rejected, and the balance will be allocated on pro rata basis. Okay, we'll move with the sum and we'll understand the concept through the sum. Okay, see, this is a lengthy sum which inclusive of three alternatives. Okay, so Janta Papers Limited invited application for 1 lakh equity shares of rupees 25 each payable as under. Okay, 1 lakh equity shares and the face value is 25 rupees. They are given the segregation of amount, application rupees 5, allotment 7.5, First call 7.5, second and the final call 5. This bracket is very important. Okay, this bracket due 2 months after allotment. Okay, after the allotment amount, after the 2 months only the first call amount is due, but we have received it in advance. Okay, this is called calls in advance. See, this one also same. We are received it in advance. It's a calls in advance. Okay, second and final call rupees 5. So first we'll total the amount 5, 5, 10, 17.5, and then 7.5, 25. Okay, 25 matches. Okay. Next, application were received for 4 lakh shares on January 1. See, we invited application for 1 lakh shares, but we received the application for 4 lakh shares. It's a oversubscription of shares. Okay, we issued 1 lakh, but we received 4 lakh. It's a oversubscription. Then, and the allotment was made on February 1. Record the journal entries in the books of the company to record these capital transactions under the following circumstances. Okay, we have to record the journal entries through the work. Whatever. Then three alternatives are there. First alternative, the director decided to allot 1 lakh share in full to selected applicants, and the applications for the remaining 3 lakh share were rejected outright. It means 1 lakh shares, whichever is issued, okay, that will be counted, and the balance will be rejected. So what we have to do, as I told in the last class, books of Janta paper is limited. The books of it's important, and the journal entries is important. Okay, it will be counted as a 1 mark or 1 out of mark, whatever it may be. And then first alternative, date particulars, etc. First Jan 20, 2017 one, what we have received told 1 lakh shares. Okay, so application amount is 5 lakh. Application received for 4 lakh. So first entry will be always whatever shares we received as applications, that will be counted. Okay. For example, bank account data are 4 lakh into application is rupees 5. Always, I forgot to tell you in the last class itself, in the company accounts chapter, while writing the journal entries, narration is important. Okay. In narration, for how much shares we are receiving and what is the face value, everything we will write. But whatever we write on the narration also, we have to mention it in the journal entry also. See, journal entry bank account data bracket, we have to write how much shares, how many shares into what is the price. Okay, we have to mention it for each and every transactions. This will be counted in the counted as a marks. Okay, for example, if you are getting as a full mark or something, for this, for example, this question is a 6 mark question. If you are getting as a full mark, it will be counted. If you don't write this in bracket, they will minus, I think, 1 to 1.5 marks. Okay, so every transactions, this calculation needs to be written in the bracket. 4 lakh into 5 and 4 lakh into 5. Each and every transactions, each need should be written. Okay, don't forget to write that. It's very, very, very important. Okay, then bank account data are 4 lakh into 5. 4 lakh means we received application for 4 lakh shares. Okay, application amount is 5 rupees per share. So 4 lakh into 5, 20 lakhs. To equity share application, 4 lakh into 5, 20 lakhs. Next, we received application for 4 lakh, 20 lakhs. Then what they have said, we need to account only 1 lakh, and the balance 3 lakh should be rejected. So 1 lakh will be transferred to equity share capital. 1 lakh into 5. 5 is the application amount money. So 1 lakh into 5 will be transferred to equity share capital, and the balance will be, as I told, it will be rejected. Rejected and refunded means bank account should be credited, while receiving bank account will be debited, while rejecting and refunding bank account will be credited. So 15 lakh is the balance amount will be credited. 3 lakh shares into 5. So transfer of application money on 1 lakh shares to transfer capital and money refunded. Okay, this is the two entry, and the balance entry will be all same because there is no effect in allotment amount. They said excess application will be rejected in the starting itself. So the remaining entries, there won't be impact. So allotment, equity share allotment, 1 lakh shares as usual. It's received as 1 lakh, issued 1 lakh shares. So 1 lakh into 7.5, and first call also 1 lakh into 7.5. In second and final call 1 lakh into 5. See, equity share allotment according to equity share capital 1 lakh into 7.5. It's a due amount and it's a received amount. Bank account data to equity share allotment, and the first call it's a due amount, equity share first call to equity share capital, and it's a received amount, bank account data to equity share capital, and the second and the final call also same. Okay, so in first alternative, the changes will be in the First two entries. First entry as usual it's the same. There will be no change. In the second entry, whatever we issued, it will be transferred to share capital, and the balance excess will be rejected and refunded. So bank account will be credited. So this is the our first alternative. Okay. And another more important thing, if you guys need PDF or the PPT for revision or whatever else, kindly message to the WhatsApp number I have given in the video section. Okay, in the description I'll be given in the WhatsApp number. You can message to the number. I'll be providing the PDF or PPT, whatever you need. Okay. So the first alternative is finished. Next we'll move on to second alternative. Second alternative what? Pro rata basis. Okay, pro rata basis we have to apply the shares to the allotment. Okay. So second alternative, first entry will be same bank account added equity share application. Whatever the shares are received as application, 4 lakh shares into 5, 4 lakh shares into 5 is a 20 lakh, 20 lakh. Next, equity share application 4 lakh into 5 is a debited. Okay. Then we have to transfer only 1 lakh into 5 as the equity share capital. Balance is the 3 lakh shares. In 3 lakh shares, what we have to do? We have to segregate. We have to pro rata basis, on proportion basis, we have to allocate to allotment amount. So to equity share allotment account, 1 lakh into 7.5. Because in equity share allotment amount, the whole value is what due amount is 7 lakh 50. 1 lakh into 7 lakh 50 is the due amount. Okay. Now the difference is 15 lakh rupees is the difference. In 15 lakh rupees, so yeah, 50 lakh means 3 lakh into 5 is the excess application amount. 15 lakh. In 15 lakh, we have to allocate to the allotment amount. We have to adjust till the allotment amount. Okay, the allotment amount is 7 lakh 50. Only 7 lakh 50 you can adjust the excess application, and the balance application will be rejected only. So, for example, if allotment amount is 100, okay, we have to adjust until 100, and the balance will be rejected. So we can't allocate more than 100. Okay, in allotment only the amount is 7 lakh 50. So we have to allocate only till 7 lakh 50, and the balance amount will be rejected and refunded. So since 7 lakh 50 we are allocated, and the balance 7 lakh 50, because 15 lakh is the excess application, 7 lakh 50 is allocated, balance 7 lakh 50 is rejected. So to bank account, 15 lakh minus 7 lakh 50, 7 lakh 50 is rejected. We have to mention each calculation in the bracket so that the examiner who corrects the paper will easily understand the solution and easily will be providing you the exact full marks. So we should make him easy to understand the solution. Okay. So to bank account, 15 lakh minus 7 lakh 50, 7 lakh 50 is the rejection amount. So the pro rata basis we are allocated, pro rata basis we have adjusted how much? 7 lakh 50 to the extent of the allotment amount. Okay. It will have the impact in the allotment money also. Allotment amount due amount is 7 lakh 50. In received entry, we didn't write received entry. Can anyone know the reason for not writing the receiving entry? Because why we didn't write the received entry? For see, if you see the first alternative, we have written the received entry. This is a due amount we have received there also. The received entry is bank account entity equity share allotment 7 lakh 50, 7 lakh 50. But we didn't write the received entry here in second alternative because we are already adjusted the 7 lakh 50 in the first entry itself in the equity share application excess applications. Okay, we are already adjusted. So we didn't receive anything. The 7 lakh 50 we are adjusted there itself. So in the received entry it will be empty. It will be zero. So no need to write the entry. So only due entry will be written and the received entry is nil because we already adjusted in the application amount. So there will be no received entry. Okay. Now let's move on to third alternative. Third alternative is a combination of both. What they said, the director totally rejected 22 lakh shares and accepted in 80,000 shares, and the 20,000 shares will be allocated in the pro rata basis. And the excess application money is to be adjusted towards allotment and calls to be made. Okay. Now, the first entry as usual, bank account data to equity share application, it will be the same. And the second entry, equity share application will be 20 lakh. And then 1 lakh will be transferred to share capital. And the allotment, what they said, 20,000, in the question they have said 20,000 is to be allotted on the pro rata basis. Okay. So we can allot the excess application in full, 20,000 shares. 20,000 shares into allotment call amount is 7.5. Okay, so 20,000 into 7.5 is a 1 lakh 50. 1 lakh 50 we have adjusted in the allotment amount. Last sum, what they say in second alternative, they said that every amount, I mean, whatever the excess application is, fully we have to allocate in the pro rata. On but in third alternative, they said only 20,000 shares is allocated on the pro rata. So 20,000 shares into 7.5 is allotment amount money. So 1 lakh 50 is adjusted in the allotment money. And the balance calls in advance. Two calls in advance means the calls are being paid in advance. Okay, the due amount, as we said in the earlier itself, the due is 2 months after the allotment. Okay, but we have paid it before, we have received it before, so calls in advance. Okay, in calls in advance, 20,000 shares into how much? 12.5. The 12.5 breakup is, see, I'll write here. The 12.5 breakup is 7.5 is for first call, and 5 is for second call. 5 is for second and the final call. Okay. 12.5 is 7.5 is the first call and 5 is the second call. The both the calls we added 12.5. The 12.5 is the advance calls in advance. Okay. 20,000 shares into 12.5 calls in advance, and the balance is bank. This bank I have written a working note. So working note. Okay. I have written a working note. I will show you the working note. Where is the working note? Yeah, this is the working note. See, excess application is 15 lakh. In excess application, we have transferred the share allotment. We have adjusted to the share allotment 20,000 shares into 7.5, 1 lakh 50. And the share calls, first and the second call, we have adjusted 12.5, 20,000 into 12.5, 2 lakh 50. And the balance amount, so 4 lakh, 15 lakh minus 4 lakh, the balance amount should be rejected. So whatever to the extent they have given in the question, we have adjusted to the allotment and the calls money, and the balance will be rejected. We can't do anything with the balance. The balance will be rejected. So we have written here bank account data to bank account data 11 lakh is the rejection amount. To calls in advance is the call amount adjustment, and equity share allotment is the equity share allotment adjustment, and the equity share capital we have transferred 5 lakh. Okay. This is the third alternative. This is a combination of both pro rata and rejection. And the third entry, as usual, allotment entry due amount 7 lakh 50, 7 lakh 50. In allotment entry received amount, as I said in the earlier second alternative, in second alternative there was no received amount, received entry, because the whole amount is adjusted in the allotment itself. But in this, only 20,000 shares is adjusted in the allotment. So the balance 6 lakh will be received is the allotment money. So as I said in the last entry, 6 lakh will be received in the allotment, because 7 lakh 50 is the due, 1 lakh 50 we have adjusted through the application amount, excess amount, and the 6 lakh will be received as the allotment money. Bank account data to equity share allotment money received is 6 lakh to 6 lakh. So shall first and final call, shall first call due amount is 7 lakh 50, 7 lakh 50. Received amount is bank account data, calls in advance account data to equity share first and final call. Equity share first and final call, whole amount is 7 lakh 50 we have to receive. But we adjusted 1 lakh 50 there. To the 20,000 into 7.5. 1 lakh 50 adjusted, balance 6 lakh we received. 80,000 shares into 7.5. So they are given in the question itself, 80,000 shares we received and 20,000 will be rejected. So 20,000 will be pro rata, 2 lakh will be rejected, 80,000 will be making received. Okay. So that's only I mentioned here. 80,000 as a received entry, and the balance is the 20,000 will be adjusted in the applications, and the balance overall 1 lakh shares. So second and final call also same method. Due amount 5 lakh, because 1 lakh into 5, while receiving bank account data, calls in advance account data to equity share first and final call. Sorry, second and final call. So second and final call only we used to receive 5 lakh. We adjusted 1 lakh there, and the balance 4 lakh received. Okay, this is the whole sum considering of three alternatives. First alternative is rejection in full. Second alternative, whatever we received as excess application, we should adjust in pro rata basis on allotment money, and to the extent we should adjust, and the balance we will be rejecting. And the third, they will be given partial of shares to be adjusted in the pro rata, and the balance will be rejection. So partial of shares we should adjust in the pro rata, and the balance should be rejected. While making the allotment money and the calls money, we have to make a received entry of how much we received as a balance. After adjusting the excess applications, how much we received as a balance, the balance should be debited as a bank account. Okay, this is considering of three alternatives over subscription concept. I hope that you understand the over subscription concept now. Based on sums, we will be understanding the concept. So if you need the PDF, you can DM me in the WhatsApp. I will send you the answer solutions. Okay, no issues. So now let's move on to the main concept. The main concept is forfeiture of shares. So what is mean by forfeiture? Forfeiture means you have paid application amount, you have paid allotment amount. In first call, you didn't pay the first call. Okay. So if you didn't pay the first call, what they will do? The forfeiture amount is cancelling the already given amount. For example, allotment and the application is allotted. Okay. Allotment is allocated for you. You didn't pay the first call. If you didn't pay the first call, whatever the call amount you have paid it before, the whole thing will be rejected. The whole thing will be cancelled, to be cancelled. That is the forfeiture of shares. So forfeiture of shares means cancelling the shares allotted to the shareholder. Shares are cancelled for non-payment of call amount and if the articles of association of the company allow forfeiture. So the company AOA should allows the forfeiture of shares. If it allows, the shares are cancelled for non-payment of call amount. Okay, call amount you didn't pay. So whatever you paid it before, the whole shares will be cancelled. So there will be an entry for a share capital account data, two forfeited shares, two share allotment account, two share calls or calls account. Okay. If calls in arrears account is maintained, for example, calls in arrears means calls in advance means we received it before itself. Calls in arrears means we didn't pay the call. Okay, we didn't pay the call and calls in arrears account is maintained separately. Then the share first and final call won't be there and share allotment won't be there. Instead of those two, directly we will mention calls in arrears account and both the amount will be clubbed and put it to the calls in arrears account. Okay, as we done in the last sum calls in advance account, the same thing will not mention share call, share allotment. We'll club both in the share calls in arrears account. We'll mention in the calls in arrears account. Okay, if calls in arrears account is maintained, we will club these two and we'll mention it at the calls in arrears account. Next is forfeiture of shares issued at a premium. They'll be issued at a premium, it will be issued at a discount, or it will be issued at a par. Okay. In premium, same. When calls in arrays account is not maintained, it will be the same entry, normal entry. If it is if it is not maintained, it will be normal entry. Share capital account data, security premium will be debited. You see the security premium, it will be debited. To share allotment, to share first and final calls amount, to forfeited shares. Okay. So if call scenario is maintained, then as I said, it will be credited instead of share allotment and share calls. So these two will be clubbed and we'll mention it as a call scenarios. So this is the premium for forfeiture of shares. Then okay, issues. Okay. We'll see the sum based on forfeiture of shares. If you understand the concept of forfeiture and reissues, the whole chapter is the nothing. The whole chapter is the main thing inclusive of forfeiture and reissue. You won't receive any sum including inclusive of forfeiture and reissue. Okay, it's the main thing. In every sum there will be forfeiture and reissue. It's an important concept. If you understand this concept, it's easy to understand. Okay, see, Sahil, I have given a simple sum for forfeiture and reissue. Also, I have given a simple sum. In the next class, I'll be giving the sum inclusive of both forfeiture and reissue or both everything, over subscription, under subscription, whatever it may be. The inclusive of everything, if you write one sum, then it's more than enough. You can understand the concept. Okay. For starting to understand, I have given a simple sum of the single concept. If you understand the concept, the whole sum of a single sum is enough. Sahil, a shareholder, failed to pay the money for second and final call of rupees 20 on 1000 shares issued to him at rupees 120, face value of rupees 100. Okay, his shares were forfeited after the second and the final call. Give the necessary journal entry for forfeiture of the shares. So what are they are telling? He failed to pay the money for the second and the final call. So second and the final call, he failed to pay. The second and the final call of the face value is rupees 20. So the face value is 100. In that 20 you failed to pay, but 80 has been paid. So forfeiture of shares means cancelling the paid shares. So the 80 what you have paid it will be cancelled and the 20 will be forfeited. Okay. The how much shares there have been issued? Thousand shares have been issued. So what you have to do? Journal entry. Share capital account data 1000 shares into face value 100. So 1 lakh. To share second and the final call two share forfeiture. Two share for second and the final call. How much will be? How much you fail to pay? 20. So 1000 into 20 share second and the final call. How much it will be forfeited? Forfeiture means cancelling. What you have paid, 80 have been paid. So 80 have been cancelled. 1000 into 80, 80,000 will be cancelled. Forfeiture of 1000 shares. Okay, in journal entry, the important is actually I missed one thing. Can you guess what I missed in this solution? So, soil journal entries. Sorry, these two things I've been keep on telling, but I missed. Okay, books of Sahil, journal entries, date particulars. Okay, share capital account data, to share second and the final call, to share for feature. So this in bracket also important, narration also important. This books and journal entries also important. Okay, next we'll go to. Did everyone understand the for feature concept? Okay. As I said earlier, you can tell your feedback or whatever comments or whatever I need to improve myself. You can tell all your comments in the comment section. I will try to improve myself. Okay. Or in concepts, if you have any clarifications or any doubt, you can ask in the comment section also, or you can message me in the WhatsApp also. I will clarify your doubts. I will clarify your whatever the problem you have. I will clarify. Okay. You can ask me in WhatsApp also. You can ask in the comment section also. I will reply to that. So next concept is reissue of forfeited shares. What does it mean by reissue? Reissue means it will be selling of shares. Okay, we are selling the shares. Whatever shares we are forfeited, we are selling the shares. So the forfeited shares means the cancelling the paid shares. What we have paid before, it will be cancelled. And reissue means we are selling the cancelled shares. Okay. So forfeited shares, reissue of forfeited shares is a sale of shares. It's not an issue of shares. We are not issuing shares. We are selling the shares. So forfeited shares may be reissued on terms as may be decided. So thus forfeited share may be reissued by the company at par as usual, at par, premium or discount. It will be whatever basis we will be selling the shares. So there will be a journal entries. So reissue means we are selling the shares. While selling the share, we'll be receiving the amount. So while receiving the amount, as usual, the bank entry will be debited. So bank account debit will be debited. Okay, I didn't write that entry. Okay, bank account will be debited. Okay, forfeited shares account data to capital reserve. Bank account will be debited. In this, there will be we are selling on basis of always while selling there will be a profit or there will be a loss. Okay, the profit will be transferred to capital reserve. So how much profit will be transferred? What are the methods? How can we calculate the profit? So that I have given here this one formula. Okay, total amount forfeited. Okay, totally what is the amount forfeited? The amount forfeited means you have to multiply the shares into the face value amount forfeited divided by number of shares forfeited. How many shares have been forfeited into number of shares reissued. Okay, sometimes the forfeited shares is rupees 100, forfeited shares is 100. Sometimes the reissue will be whole 100. Sometimes the reissue will be 80. Okay, 100 shares have been forfeited, 100 shares have been cancelled. In that 80 shares can be sold or 100 shares also can be sold. Okay, it will be given in the question. So total amount forfeited divided by number of shares forfeited into number of shares reissued minus, it's a minus, okay, minus amount with which forfeited shares account was debited at the time of reissue of such shares or reissue discount. Okay, while reissuing of shares, there will be a amount debited in the share forfeiture account. The amount debited in the share forfeiture account is a loss amount. Okay, the loss amount will be debited. So the loss amount we should minus, and then we will be finally arriving the answer as a gain on reissued shares. On selling of shares, we will be arriving the gain. The gain will be transferred to capital reserve. Okay, we'll see the sum on reissue of shares. We'll understand the concept clearly. The director of Polyplastic Limited resolved that 200 equity shares of rupees 100 each be forfeited for non-payment of the second and the final call of rupees 30 per share. What they are telling, this all the 200 equity shares of rupees 100 is forfeited. Okay, 200 shares have been forfeited for non-payment of second and the final call. Second and the final call they didn't pay. So, okay, 30 rupees per share is the second and the final call. They didn't pay. They have paid 70, and then 200 equity shares have been forfeited. Out of these, see, out of these 200, 150 have been reissued. So what I said, in 200 only 150 have been sold. So balance they didn't sell. 150 have been sold. So 60 per share to Mohit. Okay, show the necessary journal entry. So first share capital account data, two share for future account, two share first second of the final call. For forfeiture, you have to write 20,000 shares. 20 200 into 100 20,000. How much has been second and the share and second call they didn't pay 30. So 200 into 30 6,000. Forfeiture is balance 70, what they have paid it will be cancelled. So 200 into 70 14,000 will be cancelled, and then we'll come to reissue. Reissue means selling. Selling means we will be receiving the amount, the bank account will be debited. So bank account debtor, how much you've been reissued? 150 shares have been reissued into 60 per share. So 150 into 60, 9,000. 9,000 is the received amount as a bank entry. Next, share for future is the, this is the loss entry. This loss entry is the debited. So this amount will be minus in while doing the calculation of the profit calculation. Okay, share for future account 150 into 40. Why 150 into 40? Because 60 per share is the selling amount and the balance 40 is the loss amount. Okay, so share capital 150 into 100 15,000. So this is the calculation for gain on reissue will be transferred to share capital share, sorry, capital reserve. Share for future account data to capital reserve. 150 shares forfeited will be transferred to capital reserve. So this capital reserve there is a working note. So totally amount forfeited is 200 shares. This working note is a different amount. I think I will go with that formula calculations. So in formula calculation, what they have said, in formula calculation what they have said, total amount forfeited. Okay, total amount forfeited divided by number of shares forfeited. So total amount forfeited is how much? Total amount forfeited 14,000. Okay, total amount forfeited is 14,000. In that forfeited shares is 200. Okay, forfeited shares is 200 into how many shares reissued? 150 shares reissued. Okay, 10,500 minus, what they have said, amount with which share forfeited account was debited at the time of reissue. While reissuing, how much shares is debited? 6,000. So 6,000 is debited. Okay, now we have to minus first minus second. 4,500 will be transferred to capital reserve. So this is the gain on reissue of shares. So gain on reissue. Gain on reissue is 4,500. This 4,500 will be transferred to capital reserve. As I said, share for future account data to capital reserve 4,500, 4,500. But given the same thing here as a brief. Okay. So total amount forfeited on 200 shares 14,000. On 150 shares forfeited 10,500. Loss is 6,000. Profit is 4,500, and the balance 50 shares will be in the share for future account itself, because they didn't sell the balance 50 shares, they have sold only 150 shares on 200 shares. So 150 50 shares will be remain same in the for future account. So how much its value is 3,500 rupees remains same in the forfeiture account. So this is the formula calculations. Go through the formula and then do the workings based on the formula. While doing the workings, write the formula and then do the working based on that. You will get the answer. Okay. This is also the different type of working. This is also different type of working. Both the workings are correct. Okay. If you write this type of working, write the formula. This is the formula based working. Formula based working. Okay. Write the formula and then write the answer value in the below. Okay. Gain on reissue is 4,500. We have mentioned the 4,500. Do you have any doubt in the sum? Reissue is just selling the shares, and we should find the profit. While finding the profit, there will be a loss also. We have reduced the loss, and then we should find the gain. And the gain will be transferred to capital reserve account. Okay. So today we have gone through of oversubscription. In oversubscription, we have gone through three alternatives. And the first is rejection, and the second is pro rata, and the third is combination of both. And then we have done with the forfeiture. In forfeiture means canceling the paid shares. Okay, and then we have done with the reissue how much we have received, and then what amount is forfeited, and the balance we have how much they have sold, and the balance will remain the same for future account. What is the loss, and the loss you have to reduce while calculating the gain on reissue, and the gain on reissue will be transferred to capital reserve. Okay. So these are the concepts we have done today. So the main concepts have been done today. And the next class I will come with the only sums. Before that, you go through all the concepts. You go through the sums. If there are any doubts in the sums, you can message me in the WhatsApp number, or we can put it in the comment section. I will clarify your doubts because the sums, basic sums have been clarified, and there is no doubt on the basic sums. We'll move on to the lengthy sums. Okay, or very difficult sums. Okay. So do like the video, share the video, and subscribe to my channel. Okay. We'll see you in the next class. Okay. Thank you. Bye.